Hey everyone, welcome back to Corporate Decoder, the place where we sift through corporate filings so you don't have to. Today we're diving into a report so packed with details, it's like trying to assemble IKEA furniture without the instructions. Let's see if we can decode this thing together. Today we are looking at Piedmont Lithium's annual report, and the big story is this: they're planning a merger with Sayona Mining. It's a huge move that could reshape the lithium market, but it's not without risks. We will break down their plans and see how prepared they are to execute them. Alright, so what is Piedmont Lithium? They are an American company trying to get more lithium into the North American market, a key ingredient for electric vehicle batteries. They own a big project in North Carolina called Carolina Lithium and also have investments in mines in Canada and Africa. Their main goal is to become a top lithium producer in North America. They want to mine spodumene, a lithium-rich rock, and turn it into lithium hydroxide, which is needed to make electric car batteries. They expect that they will produce a lot more lithium hydroxide than the US currently produces, so they think that they can support the growing demand in North America. Now, the biggest news in the report is the proposed merger with Sayona Mining. Basically, Piedmont and Sayona are planning to combine their businesses in a stock-for-stock deal, meaning Piedmont shareholders will get Sayona Mining stock. This merger needs approval from both sets of shareholders and regulators, and they expect that it will happen in mid-2025. If the deal doesn't close by September 2025, either company can walk away. Of course, with any big merger, there are risks. If this merger falls apart, Piedmont might have to pay Sayona Mining a termination fee of millions of dollars. There is also a risk that Piedmont and Sayona may have difficulty attracting executives and employees in light of the merger. While the deal is pending, Piedmont is restricted on what kind of business it can do, which in turn also risks their ability to grow. Let's talk about their existing projects, starting with Sayona, Quebec in Canada. Piedmont owns a 25% stake in Sayona, Quebec, which runs the North American Lithium, or NAL, mine. There's also an offtake agreement, which gives Piedmont the right to buy a large chunk of the spodumene concentrate NAL produces, which they then sell on the market. The NAL mine restarted production in March of last year and is ramping up output. In fact, Sayona Mining achieved record production of 193,162 DMT for the one-year period ended December 31, 2024. Next up is the UA project in Ghana, West Africa. Piedmont has the potential to own 50% of the company that owns the UA mine, Atlantic Lithium Ghana, which includes Atlantic Lithium's main project, UA. Piedmont can get a 22.5% stake, but will be required to fund $70 million to increase their ownership to 50%. There's also an offtake agreement with Atlantic Lithium, which allows Piedmont to purchase 50% of production. The mine is still waiting on final approvals from the Ghanaian government. This part is still pending approval, but there has been some positive development with the environmental permits granted in September 2024. Now to their wholly owned project in North Carolina called Carolina Lithium. This is a big one because Piedmont wants to build a mine, a concentrator, and a lithium hydroxide plant all in one place. They did receive a mining permit in 2024 and are working with state and local agencies for additional permitting activities. It is expected to produce 60,000 metric tons of lithium hydroxide per year. There was also a Tennessee lithium project in the works, but Piedmont decided to put those resources towards expanding the Carolina Lithium project instead. So, Tennessee is on hold. According to the report, Piedmont believes it has several strengths. One is that they're already generating revenue from the NAL mine, and they have assets located in different geographical locations. The other is that the company is based in the United States. To bring in revenue, Piedmont has entered into offtake agreements with companies like Tesla and LG Chem to sell spodumene concentrate. For example, the agreement with Tesla commits Piedmont to sell 125,000 DMT of spodumene concentrate from NAL in Quebec. The term of the agreement runs through September 2026. Now let's talk about risks. Piedmont faces a bunch of challenges. Mining is inherently risky. There's also the risk that lithium prices are volatile and can be affected by factors that they cannot control. Like most companies today, there are cybersecurity risks. Finally, there is also the fact that the company depends on key management employees. Piedmont has various committees in its governance structure, including a transaction committee, audit committee, leadership and compensation committee, and nominating and corporate governance committee. The audit committee is responsible for oversight of cybersecurity threats. The company's stock is also highly volatile, and the price has swung wildly in the past year. The company needs capital to operate and has a universal shelf registration statement on file with the SEC to provide capacity to raise capital, but there's no guarantee that it will be able to secure funding. Now let's look at some key financial numbers. As of the end of 2024, their investments in Sayona, Quebec totaled $70.2 million. Through its 2024 cost savings plan, the company has achieved $14 million in annual cost savings. To achieve these savings, they have reduced their workforce by 62%. Finally, let's take a look at the balance sheet. As of the end of 2024, total assets were $349,885,000. Total equity was $298,247,000. So, what's my take on all of this? Piedmont Lithium is making some big moves, and there is a lot of potential here given the demand in North America for lithium batteries. The merger with Sayona Mining could be a game changer, creating a larger, more diversified company. However, the deal is still uncertain, and there's also the risk that the deal might not materialize. The reliance on just 4 customers is a definite weakness. Losing any one of those relationships would really hurt their bottom line. Also, keep an eye on those lithium prices because if those drop significantly, it could be a major setback. Overall, Piedmont Lithium is in a tricky but promising position. The industry is growing, but it's also risky and competitive. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and don't forget to subscribe for more corporate decoder deep dives.